So what we want to do now is we want to show how we can reuse this model to do a valuation of another company. And in this case, our next company is going to be Apple. And we're going to do an as-is and a final valuation of Apple. So as part of your extra credit assignment for Wednesday at 10 a.m., right? So you don't have to do this, but if you do it, it's potentially worth 2 extra credit points, right? You have to do an as-is valuation of Apple, turn in before class by 10 a.m. on Wednesday, and then on Wednesday we'll talk about Apple's as-is and then Apple's final valuation. All right. So what I want to show you is how we actually get the data out of Bloomberg to reuse the model. Okay. So what I'm going to do is I'm going to start with the as-is McDonald's model that we built last week. Okay. So this is where we were last Monday with McDonald's when we did the share price of $97.47. Right. And I'm going to use that file. But you could easily use the file that you turned in. But basically we need the file. And specifically, if I go here to the tab, Model Data, this is from McDonald's data that we exported. This is what we have to have for Apple. So, in Bloomberg, I'm going to go to Apple, AAPL, US Equity. Now, where do I get in Bloomberg Apple's historical financial data? What's the code I'm going to use? FA, and then I want to go to the custom tab, and in the custom tab we created a template. I called mine the model template, whatever you named your template, but you want to bring up that save template for the data. Now remember that post the homework assignment from 2 weeks ago, I said there were 3 fields that you needed to make sure you added for when we reused it. One was called minority interest, increase in capital stock, decrease in capital stock. So those 3 fields need to be in here, otherwise you're going to have a problem. Okay? Now, when we export, we want to export 6 periods, and we want to make sure we have the settings, which again, we should have already had this set up, but just in case. For fundamentals, number of periods, 6. Okay? For data, we wanted to make sure that all these were unchecked. For display, we wanted ascending so that the most current year is on the right. And for report Excel tab, we wanted to make sure we export as value as opposed to export as formulas. So that way it'll give us numbers and we can use this Excel file when we leave the lab. All right? So that would have been what we had already done. I'm just showing you the settings you need. And then finally you go to Output Excel, the current template, and that will dump that data into Excel. Now you should get, when it opens up Excel, a security warning. You say yes, and then it will give you that Excel file. Now, we then want to save this data. File, Save As. I'll put it somewhere on my desktop. And I want to change this from an XML file to an actual Excel workbook. And I'm just going to call this Apple-Data. So I previously named it in the previous class. You call whatever you want. All right, so I now have this file saved on my Downloads folder. So I'm going to go to this file, and I'm going to open up this file that I just exported. So this is my exported data from Bloomberg. Now the next step is to copy and paste this data into this tab row by row. So it's got to be put in the same rows. All right? Now, what I'm going to do is I'm going to go and I'm going to take the Apple data, and the simplest way to do that is to click right here on this area, and that will select the entire sheet. Then I want to either right click and hit copy, hit the Control or Command C copy, or edit copy. And then I want to click on the McDonald's model data, same area to replace the whole sheet, and then right click, paste special values. So I want to paste the values as opposed to just paste. And the reason why is because Excel, which will try and be your friend sometimes, right? Friends get you in trouble every now and then. Well, if you just copy paste, it will make references to the old spreadsheet, right? So it'll make references to that Apple data spreadsheet. Right, so every time you open up this, it'll be like, where's the Apple data spreadsheet? So we don't want it to link to the other file. So copy, paste special values literally just takes the numbers and overwrites the numbers. So it's just the easier way to do it. Okay, so with that in mind, row by row, I've updated the data for Apple. Now, one of the things that's important is I need to also update my assumptions. So I go to my assumptions, and I need to update the assumptions for Apple to replace the assumptions for McDonald's. So make sure my last reported year is 2014. It is, so I don't have to change that assumption. I'm going to leave operating cash at 2%. WACC is probably going to be different. So again, for Apple, WACC, oh, what's going on? WACC, why'd that switch to IBM? Start these again. Apple, WACC, 8.1%. In fact, I'm going to take a screenshot of this. You don't have to do the screenshot. I'm just going to do this for purposes of the homework assignment. So we have the WACC is now 8.1. Next, my CVG, I'm going to make that a 3% placeholder, but to be honest with you, my placeholder doesn't matter. As part of the as-is valuation, you're going to need to get the multiples for Apple, and given the multiples, you're going to have to, based on the EV to EBIT multiple equation, pull out a G. So using the multiples, you're going to figure out the G for Apple, just like you did for McDonald's, for the as-is. Right? Next, shares outstanding are going to probably be different for Apple. So again, I go back to Bloomberg, I go to the DES screen, and I get their shares outstanding, 5824.7. So again, I'll take a screenshot just for my own reference. $58.24.7. Next, I need to go to the EEO screen. And I need to update Apple's earnings estimates for the next 2 years. In fact, I'll take a screenshot of this for posterity. And the Apple sales are $225,977,000,000. 225,977 and 238,337. EBITDA is 76,774. These numbers are just ridiculous. 76,774 and 82,458. Right? Next, I go to the ratios, and I want to make sure that whatever I had in for McDonald's doesn't carry forward. So what I should have done before is I should have taken these first 2 years, and I should have made these non-yellow cells, because I really don't want to change the first 2 years of EBITDA or EBITDA margin or revenue growth rate, because I'm solving for that from the earnings estimates. And as I said, if I had changed it for McDonald's, I want, because I have a new company, equals the previous year, equals the previous year, and I want to copy and paste that out so I don't have a McDonald's number throwing off my Apple valuation. Same thing, if I change the tax rate out here to 34% or something like that, equals the previous year, so I don't have any hard-coded numbers here. All right. Finally, I have a value error in my model. Right? Where that occurs is because Excel is exporting from Bloomberg sometimes a 0 as a dash dash. Right? I don't know why it chooses to do this, but Excel can interpret that as a 0. So if Bloomberg gives you a dash, Excel chokes on the dash when you refer to the dash. Doesn't interpret that as a number. So what we have to do is we have to take anything that's a dash and turn it into a 0. So here's the quickest way to do it. Hit Find, which is either Control F or Command F, depending on Mac or PC. find the dash dash, what's in that cell, replace them with zeros. Replace all. That will get rid of the value errors. Right? Because Excel can't calculate a value with that. Okay? So now we're getting really close to being able to do our as-is valuation for the extra credit assignment. So here's the other thing. We need to do a data integrity check of our model. One of the ways to do that is to go to the CFI tab and make sure that our CFIs balance every year. Because if the CFIs balance, then we probably have balancing statements. So in this case, balance, 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 historically don't balance. So we have a problem with our model because our historical CFIs don't balance. Our forecasted CFIs do balance, but the historical CFIs do not balance. Well, that's a data integrity problem as far as I'm concerned. And by the way, this is something that the professionals do not do and easily could have done evaluation with a flawed model because they wouldn't even realize that they had made a mistake. Because in our balance sheet, we had forced the balance sheet to balance. So since we have historical balancing balance sheets, we'd assume we have good data integrity, but the CFI tells us we do not. So there's a flaw in our model, in the CFI. Okay? So your other half of your extra credit assignment, fix the model. So for Wednesday's extra credit, you have to fix the model and then complete an as-is valuation of Apple. All right? If you're not able to do that during Wednesday's class, I will give you a fixed model. All right? And we'll pick up there, and it's no loss to you because this is purely an extra credit assignment, and you don't get the 2 points. You don't lose it. You can only gain it. All right? So how do you get the 2 points? You got to fix the model, and then you have to complete the as-is valuation. So you're not going to turn in a write-up. You're just going to turn in that Excel file. But it's got to be fixed, and it's got to be balanced for the CFI, and this is an individual assignment. Okay? Yes? And I just recorded this so you can also see this on video. Right? But as I said, I'm just pulling the assumptions right out of Bloomberg. But those are the ones that we need to update to turn McDonald's into Apple. And then finally, I want to probably save this as instead of McDonald's, I'm going to put it in my Apple folder here, and I'll call this the Apple as is, AAPL. Now, here's a hint. How do I troubleshoot this? Well, the CFI, which doesn't balance, is based on the TII and the TFI. So let me look at my TII, and what I'll notice is that my TIIs do balance historically. So my problem is not my income statement. My problem is likely a balance sheet item because it's my TFIs that don't balance. So here's the other thing. They balance in the future years, but they don't balance in the historical years. And we're using the McDonald's template. So what could likely cause that is that Apple has something on their balance sheet that McDonald's didn't. It was 0 for McDonald's. And so therefore, when I plugged it into the balance sheet for McDonald's, it was 0, and I probably forgot to plug it in. So there's something that needs to be on this model data tab that McDonald's had, which was non-zero for Apple, that I need to find out what it is, and I need to add it into my balance sheet, which will cause my TFI to balance. That's your hint. Right? If you can figure that out, great. If not, don't worry about it. You won't get the extra credit, and I'll give you that solution on Wednesday. But we will need to do this to make sure that when we reuse this model for your group projects, that everything is in balance. Questions? All right, so this assignment is due at 10 a.m. on Wednesday for all sections. Upload your Excel file individually. On Canvas, if you go to the Assignments tab, the link which is available, I hope I hit Publish. Oh, here it is. I'm going to hit Publish. It's called Extra Credit 2, Apple As Is and Model Fix. Again, if you select, you'll just upload your Excel file, and this assignment's worth up to 2 points. Yes?
If you go to your Valuation tab, what does your number say, like current?
You're talking about for Apple?
Yes.
It's $200 a share, 201.19. And obviously, we have to get that to today, when I did the assignment, 127, plus or minus $1. So you need to get it down to 127. But you also have to have a model that balances historically. So those are going to be the two parts of the as-is. And you got to get the right G from the EV to EBIT equation. Okay, questions about that? Other questions? Yes?
So there's something that's on the McDonald's balance sheet that's a zero or something on Apple?
Or something that was on the Apple balance sheet that was not on the McDonald's balance sheet. So therefore, I didn't have to worry about it when I balanced the McDonald's one. So it's either something that was missing, that it was zero for McDonald's, and it was a number for Apple. So that's definite. So you just identify what that is, and then make sure you add that into the balance sheet here, and then everything will flow and balance. All right. By the way, at the end of the last class, 3 people found it within 3 minutes. So it's actually one number or one row that's a problem. All right, so that's the other hint that I'll give you. I'm not going to give you any more. Okay?
Can you go back to the assumptions tab?
Going back to the assumptions tab? Sure. So as I said, I just put in the current earnings estimate overview assumptions, put in the current shares outstanding, current WACC. Again, you'll have to solve for the G that we want to use in the as-is. 127 is the share price. Back into it using the process we did for McDonald's. During Wednesday's class, we'll talk about the as-is for Apple, and then we'll do a final target valuation for Apple. All right? But as I said, it's a different type of company because unlike McDonald's, Apple's still in heavy growth mode, and there's a lot of uncertainty about their future. So it'll be a more interesting conversation for a different type of evaluation. Sorry, let me save this file.